Welcome back to the best proof for you trading floor. Today we're breaking down the USD CHF. Let's hit the macro fast. The Swiss franc has been soaring, hitting its highest level since July 2011 around the 76 level. That's like a couple of months ago. And this is driven, of course, by easing safe haven demand as US-Iran ceasefire hopes grow, because we do actually see a shorter term decline as well. We've got 1, 2, 3, 4, 5, 6, 7 sessions in decline. And then we had an inside bar yesterday, which now sees a hook created in the RSI. And with the actually Bollinger Bands, both of them like flattening now, this suggests further continuation to the upside. We also have the Swiss National Bank, to be fair, that has clearly stated that they are highly willing to intervene in FX markets if the franc gets too expensive, which could undermine price stability in Switzerland. So I think that has happened on that level, and we might see a revisit of this particular level in the medium term. Medium term, I say, because the dollar looks like it's finding its footing today. Okay, so this inside bar, I think it's important for us, okay? Because if we do manage to close to at least today above 78.40, which is the previous high of the Tuesday's range, then we could see this literally going all the way up to 78.95, which is the opening of the Monday 13 high momentum candle to the downside. It's not necessary that we'll just go stop there. We could go higher and reclaim that liquidity sweep, okay? But then obviously this becomes a bit more of a sideways markets rather than, leaning to the downside. So if we do stop at 78.53, which is this low over here, 78.67 or the 78.95, then the chances of a move to the downside then are going to increase. The important thing to know, though, is the flattening of the Bollinger Bands here, which suggests a high likelihood that we're going to push up, at least in the short term. And if we look at this from a corrective perspective, we already, hit some sort of Fibonacci's, perhaps the 70.23.6. Where is it? Interesting. Let's just do that. 23, oops, 6. This is at 78.50, a strong psychological resistance as well. But that doesn't mean we're going straight back up. If we break that level, we typically the zone of the correction, a pullback is 23 to 38, a deep is like 50, and then a deep correction is like the 61.8. So there is potential for these numbers, but the one that is going to hold prices is probably going to indicate that bulls do not really have control, and the lower territory here at 78 probably is going to be reclaimed. For that, of course, we do need to go down the 4-hour chart to see what's signaling there. Well, look at this. We have the median line aligned with the RSI 50, okay, rejecting prices currently. We have had one mean reversion rejection, second mean reversion rejection. Actually, that wouldn't even consider that. That's the first and that's the second, okay? So let's delete this. This is the initial breakout. But here's what is important, okay? This is the second time we do. Typically, we see 3 times that happening, okay? And you've got 1 and 2 and 3 and 4, and perhaps one more leg to the downside at 77.60. So if we do hold that territory, okay, the middle Bollinger Band or the 23.6 Fibonacci, then we could see prices revisiting 78.90 and breaking perhaps even lower. The lower territory for me, the end target is going to be the 76 level initially, right? But obviously, because we're looking at this on the 4-hour now, and if we do see a breakout, and the right way to do this is to look at the breakout at the moment of the breakout, not right now, but we can evaluate that potentially, if we do see a breakout of this range, a duplication of that range brings us down to, well, what? 76, exactly that level. So this is important for context. The question is the RSI or any of these resistance levels going to hold? A very critical level, of course, is strong support at 78.70, and also the 78.50, which is down here. We have seen multiple tests and breakdowns here, of course, but if this median band holds as resistance and will break down below the lower Bollinger Band at 77.63, that is a level we need to pay attention to, then we could see another duplication of the previous range breakout. That projection takes us all the way down to 86, which is an 11-year low from back in January. So even if we do bounce higher from there, given of course the S&P said they would intervene, this still might not be the end of that move to the downside. Obviously, when we do multi-time frame analysis, things are always better. Coming down on the 1 hour, do we really see any signals that are alarming? We do see the band expanding, okay? This is important for context, but they look a little bit flattening still. This could easily be a false breakout because currently, let's not forget, the top of our range is at 78.31 over here. We did have a retest. That's a second retest. Can we hold that level? If we do, high likelihood we spike all the way up to 78.68, which would be considered kind of an extreme false breakout on the 1 hour at least. But it is what it is. If we break below, then we could be looking for prices to move lower. So for best prop for you traders, here's a setup. The entire structure hangs on whether the 0.78 holds. 78 is a bit lower, yes, but it is what it is. In the very short term, of course, it's the 78.30. And then if we do move higher, it's the 78.70. And perhaps even this low, the week low at 78.50, also psychological level. So the play here is to watch for a final push higher to retest the structure, any of the structural resistances. And given the RSI that will have a bit more to go to reach overbought territories, I would prefer to see that tag, the prices tag that zone. So this would be a short position at around 78.50. Okay, initially we'll be looking for just the lower territory over here, but essentially you've got your stop above that level. Only this is a 250 risk reward duration. If you let it run, it will be much better opportunity as well. So the focus now is on the RSI on the 1 hour and whether we do have a false break or not. Wait for that resistance test, watch the divergence, and I'll see you in the next breakdown.